You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns that show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's forex pair that we need to break down. In today's video, I want to speak about EURUSD, one of the most traded pairs in the market. And as usual, the way in which I will be breaking it down is first, I will be covering the technical aspect. Then we will go and see what we have from a commitment of traders perspective, which is basically what hedge funds, so the non-commercials in the market are doing. And by the end of the video, using the combination of these two different types of analysis, we will be able to understand where we can be looking for the best probability setup here on EURUSD. Now, starting from the monthly time frame, what do we have? Now, here on the monthly, we have a market which has just provided a quite strong impulse to the upside, followed by this correction, and currently the market is starting the continuation to the upside. Now, if we look at the structure, what we can also notice is that this market has just broken back above structure resistance, which is now turned support. In fact, zooming in, we can see that from here, the market had started this move to the downside. And after respecting this area as resistance and breaking above it, the market broke back below. And at that point, this previous resistance was again turned resistance here. However, when the market went and tested that zone, it actually created this monthly close here back above the area. And as you know, in the market, previous resistance, once it is broken to the upside, is turned support. So the market retested here with this wick, this new previous resistance turned support, and obviously started this rejection to the upside. So here on the monthly, everything seems quite bullish. We can expect more continuation to the upside, but one thing that we definitely have to keep in mind is that at the moment we're testing exactly the previous monthly high, which obviously is a supplied zone. In fact, from here the market started all this move to the downside, and since we are testing the exact same supply, there is the possibility to see the market provide a rejection to the downside. Going down on the weekly time frame, what do we see? Now here on the weekly, we can see that everything is currently bullish. The market has been creating higher highs and higher lows, and we can also see that at the moment we have just broken above the previous weekly resistance, which is now turned weekly support. In fact, from here the market started this move to the downside. However, now that the market has broken above the area, this previous resistance is turned support, and we can expect the market to test this previous resistance turned support before starting a rejection to the upside. So here on the weekly, we expect a short-term correction to the downside before the continuation to the upside. Just a quick thing, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we see? Now, here on the daily, I had spoken about EURUSD quite a few times in the past. I spoke about EURUSD after the creation of this M pattern from here. I made a full breakdown explaining all the reasons for which, from this area, we expected the market to provide this move to the upside again from here. I made a full breakdown explaining all the reasons for which we expected the market to provide this move to the downside, providing a lower low, and again, that is exactly what the market did. Then we had the creation of this W formation, and from here, I made a full breakdown explaining all the reasons for which we expected the market to provide this move to the downside. And again, that is exactly what the market did. Then from here, I made another breakdown explaining why we wanted to see first the move to the upside, and then from here, a correction to this zone before the continuation to the upside. And again, that is exactly what the market did. And by the way, I will link in description all this previous analysis so you can go and check it out for further reference and more free education. You find everything linked below. However, at the moment, what do we have and how we can be looking for the next potential opportunity? Now, first of all, we have to understand what kind of structure the market is currently rejecting to the upside. Well, here on the daily, that is quite easy to identify because exactly from here, the market had started all this move to the downside, confirming this area as resistance. And since the market has now broken above this zone, this previous resistance is now turned support. And as we are testing this previous resistance turns support, we did expect anyway from the first place the market to provide this rejection to the upside. Another important thing to keep in mind is that after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just retraced exactly to the 0.32 of the Fibonacci taken on this daily impulse, which is a quite strong support area. And since it is currently lining up also with the previous structure resistance now turns structure support, it is actually a confluence of support, which the market is starting to reject to the upside quite aggressively. Now, in providing this higher high, the market, however, is also printing a bearish pattern, which is this overextended W formation here. Now, after the creation of an overextended W formation, what you expect is for the market to provide a move to the downside to complete the pattern itself at the previous resistance turn support. So here on the daily, what we expect is for the market to provide a move to the downside to complete the pattern at the previous daily resistance turn support here, exactly at the confluence of support that we had previously identified. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what the non-commercials in the market are doing, which are the biggest speculators, so the hedge funds, what we can see here is that with the last reports, net positions have been increasing. In fact, we went from having 66.8k net positions all the way up to having 99.8k net positions with 232k long positions and 132k shorts. So the euro is getting quite strong. Now, keep in mind that all currencies on the spot are traded against the USD. So if you check the data for the euro, you're actually already checking euro USD. And obviously, since net positions are increasing, we did expect the market to provide this move to the upside, which is exactly what the market is doing. However, if you look at the short positions, we can see that lately, hedge funds have been also adding shorts while they're adding longs. So obviously the market is in an uptrend, but they're already starting to hedge and already starting to build up their short positions, meaning that a short-term correction to the downside for at least the completion of the W formation is very possible. And remember that at the beginning of the video, we identified that on the monthly, we are inside of a supplied zone, meaning that a correction back to the neckline is very possible. So how we will be approaching this potential short-term shorting opportunity with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the upside. And we will be waiting for the market to shift from an intraday bullish market as we have and as we will have to an intraday bearish market. And only if the market will shift from an intraday bullish to an intraday bearish market, only at that point with students, we will be adding EURUSD to our watch list. And as soon as the market will provide to us one of our valid entries with a good risk to reward and good probabilities at that point for the move to the downside and for the market to complete the pattern at the neckline, which is this previous resistance, turn support here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And we also have a daily Q&A session in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.